Hi, my name is Rob Reel, Associate Partner at Insight Financial Marketing. Thanks for joining us for our webinar today. I've included my LinkedIn profile below for you to be able to communicate with me after the webinar today. And you can also visit us at our IFM website, which is www.infimark.com. So today's webinar is entitled Outlook for the Future, 2021 Bank Strategy During COVID and Beyond. And what I'd like to review with you today is just a quick review of the onset of the COVID crisis and how this impacted our economy and the financial services industry. And we'll just do a review also of how quickly technology is changing in the financial services industry, which this has been accelerated because of the COVID crisis, but these changes had been well in the works even before the COVID crisis has impacted us also greatly. And at the end, we'll be able to review with you some traditional financial institutions have been able to compete more effectively for the future, and IFM's recommendations for how institutions will be able to compete against big tech, financial technology, DeFi, and other large national banks as we move into the future. So we'll be reviewing that in more detail as well. But I did want to take a few minutes here initially to be able to do a quick review of where we've come from in terms of how we've been able to work our way through the COVID crisis. It has certainly impacted all of us in some way and to some extent, just because of the way that we've adapted how we work and live. The work from home environment is certainly still with us. And it's interesting just to take a quick look back at how things were in such flux initially with the onset of the COVID crisis, where we had some states that remained open, some states that closed completely down, others that went back and forth. And then being able to just remember how many financial institutions put so much effort into rolling out the PPP loans and being able to provide those to our small businesses and corporations in such a quick way. And then there was also the other enhanced federal stimulus payment programs that rolled out quickly during the onset of the crisis that brought relief to many families and individuals during the onset of the crisis. We can see that some of these programs are even continuing to this day. In fact, the child tax credit advance payments just started earlier this summer in July and are continuing through December and the end of the year. But it's also interesting to see just how beneficial the enhanced unemployment benefits were, in particular to many of those that were hardest hit in some particular industries like the travel business, the restaurant business, and how crucial they were to helping us work our way out of the crisis. I thought this chart was interesting. This is from the Economic Spotlight from Deloitte Insights, where we can just see how dramatic of an impact of the onset of the COVID crisis was to unemployment, and how even though we've managed in some way to be able to work our way out of the crisis, that there were 7.1 million fewer people working in May of 21 compared to February of 20. Interesting to see that while we have recovered, and especially in some industries have recovered to a great extent, that there are still some dramatic changes that have occurred in our workforce because of the COVID crisis, and how this will continue to impact the financial services industry going forward. And in particular, Deloitte highlights how the low wage occupations have been and continue to be more impacted because of the COVID crisis. And in fact, you can see just how their impact continues to this day, being more impacted compared to other segments of our worker population. I also wanted to be able to just do a quick review of COVID's impact from a lending perspective. And of course, we are all very familiar with mortgage rates being at all-time lows. We can see how at the onset of 2020, the rates dropped even further, which sparked a dramatic rise in mortgage applications. And for many areas throughout the country, the real estate markets continue to be strong. However, now that it's October, getting ready to go into November of 2021, we can certainly see more of a seasonal slowdown that's occurred in many real estate markets, and rates have begun to inch up just slightly. But there's talk of how this rate environment will continue to impact our financial services industry going forward, and we'll talk more about that here momentarily. This chart was interesting in terms of how have investors reacted to COVID. And you can see here just the dramatic and sharp downturn in the markets in early 2020 as a result of the first onset of the crisis in the US, and how just dramatically that impacted the market. But since then, due in large part to a lot of the federal stimulus programs that have been rolled out, the markets have actually quickly recovered, and you can see just how much so in this chart. Now, the NASDAQ market is more focused on technology and biotech firms, and you can see how investors have rewarded firms in this area much more strongly than other traditional corporations because of the ability for technology firms to provide digital solutions to consumers and businesses as we worked our way out of the COVID crisis. And so in a large part, this has certainly impacted the financial services industry. And you can see just how so, because of the dramatic rise in the valuations of firms like PayPal and Square, who have rolled out solutions to help consumers deal with social distancing requirements, the work from home requirements, and just being able to provide solutions other than a customer-facing one. So I thought it would be interesting just to do a quick review of this chart. So some of the highlights I wanted to touch on as we determine what the future may bring for the financial services industry, of course, include the interest rate environment. The Fed has indicated that there may be some rate increases as we move into 2022 and 23. And we can see that while rates remain low, this will certainly be something that will impact the financial services industry going forward. And as a result of the federal stimulus programs that have been launched with some success, this has brought about a dramatic increase in money supply. And we can see how this has impacted banks and other financial institutions from a deposit standpoint, and we'll touch on that here shortly. Competitive and regulatory forces are continuing to put pressure on financial institutions from a net interest margin standpoint, a lending standpoint. The regulatory environment when it comes to fees is certainly showing itself as it relates to overdraft fees, and how some institutions are certainly working to revise their approach to overdraft fees. And we understand certainly that the payments side of the business is undergoing even more of a rapid transformation as we can see the impact of financial technology and cryptocurrencies being able to impact how money is moved across borders as well. So certainly those forces will not abate as we move forward through 2022 and 2023. There's also going to be continued competition from not only financial technology, but big technology firms such as Apple, Google, the legacy financial technology firms, as some say now. There's a lot of change in terms of how they partnered with traditional financial institutions to offer more traditional bank-like services, such as checking accounts, being able to move money much more rapidly than ever before, lending. So you can see that this competition will also continue to be strong as we move forward. And I wanted to make mention too of just how much competitive pressure the top two largest traditional banks, being JP Morgan Chase and Bank of America, will have on the industry as well. And we'll touch on that on the next slide. And interestingly, as we've seen just in the last 12 months, the number of traditional financial institutions continues to contract through mergers and acquisitions. And I thought it was interesting just to take a look and view of how in 2008, there were over 12,000 commercial banks, and now they're less than 5,000, according to the FDIC. And I think the specific number from the FDIC website was 4,917. So you can see this trend will also continue to move rapidly as well. And the impact, particularly on smaller community banks, because of all these pressures, continues to remain strong. In fact, recently did a presentation where I showed from a community bank's perspective that these big tech and fintech firms are offering more competition than ever before, simply because of their branchless solution and how they can apply to consumers and businesses anywhere throughout the country because of their digital functionality. So I mentioned about the impact of the two largest national banks. You can see here that CNBC had a chart that showed how the rise in deposits was particularly strong with Bank of America and Chase from 2019 to 2020, while the rest of the industry average was about 4%. They were well into double digits. And you can see this trend continued from 2020 to 2021 with the information above, where total deposits increased quite significantly for Chase and Bank of America as well. So just the sheer size of these operations has enabled them to develop and implement and put large amounts of money into developing their capabilities, particularly in the digital space. And you can see just how large these two institutions have become compared to other traditional financial institutions, and their impact will surely be felt as we move into the future as well. And I know this is kind of basic information here. Many of you all are familiar with just how rapid technology is changing our industry. Rapidly, this technology is changing our industry. But just to be able to familiarize ourselves with the basic changes that are occurring, where from a traditional finance standpoint that has been focused on savings, lending, and investing, you can see the specific solutions that are being developed in each of these areas by financial technology firms. And that's one way that these fintech firms have been able to succeed, is by offering specific solutions to consumers and businesses' needs. And that may be the ability to quickly get a personal loan in a matter of minutes via an online digital interface, or it may be establishing a digital business checking account. It was interesting to see that American Express just recently announced that they're offering a business checking account that is all digital. It follows on the heels of their acquisition of Cabbage last year. And then you can also see how decentralized finance is starting to grow rapidly and impact our industry as well. There's certainly, as there are specific solutions that have been targeted to individual consumer and business needs, that has certainly grown in terms of how these firms have used the blockchain to be able to impact traditional areas such as savings, lending, and investing. In fact, Coinbase, one of the largest cryptocurrency firms in the US, was recently working on being able to roll out a a program called Coinbase Lend, which would offer a high yield percentage account, similar to a checking account where consumers could move money in and out of the account, but based on cryptocurrency. And so that certainly attracted the attention of regulators, and they put a hold on that rollout by Coinbase. But there's certainly many other cryptocurrency firms that have a similar product out there as well. So we can see how rapidly this part of the industry is changing and how it's impacting traditional financial institutions to a very large measure. So I mentioned in the previous slides about just how some of these big tech firms have become more bank-like. And you can see all of the different areas now that these firms have ventured into. Square being able to have its traditional payroll services program. And they offer a debit card. They offer the Square Cash app, which enables virtual currency investing, traditional investing, P2P functionality. And quietly, Apple has continued to grow its Apple credit card program, the Apple Card, and its Apple Pay point of sale service has become more heavily used by consumers and continues to grow. And you can see also PayPal and Venmo certainly have grown their offerings now, especially Venmo being able to roll out more point of sale capabilities with online and in-person merchants. And you can see also too that SoFi has grown quietly in terms of how they've offering more and more traditional financial services and products. Interesting to note that Google has recently announced that they've decided to back away from offering their Google Plex account. This was a much highly anticipated development that was slated to occur this year. And you can see the institutions that had initially engaged with Google and in this area, but they've certainly backed away from this development. And Google contends that they will still have a big presence in the financial services industry, but their strategy is definitely changed here for the short term. It's also important to understand the impact of neo-digital banks. And these are banks that are branchless banks that offer digital solutions to traditional financial needs of consumers and businesses. You can see this part of our industry is still changing rapidly. We've recently had some European-based neobanks that had been working to move into the US market. They've actually had applied for a bank charter, but have since withdrawn those efforts. At least some of them have. So you can see how this area continues to change. And you can see one of the firms, Chime, listed here on this chart, has become much more well-known throughout the industry because of its capabilities and its rapid growth. This is an area that continues to change, and it's something that every institution should have their radar out on in terms of understanding the consumer behavior and business behavior's reaction to the different offerings in this area. I mentioned about digital currency and cryptocurrency. This area is changing so rapidly that for many it's been difficult to keep up on all the changes. But you can see here I've listed just some of the more well-known cryptocurrency wallets and firms that have opened up cryptocurrency investing to consumers. You can see that that the terminology and technology continues to change, but primarily the big value add is the blockchain technology that is being accepted and invested in by many of the largest financial institutions now have begun to open up more towards investment in this particular area. So with that, we can say that the interest of these larger firms in this particular space will only encourage additional growth for the future. And this is something that we should all be more familiar with and understand, because it's certainly impacting consumer and business behavior. One particular area that I thought would be interesting to touch on briefly here is just how quickly non-traditional firms have moved into traditional banking capabilities, and Intuit's QuickBooks is an example of that. I thought this chart was interesting in terms of how QuickBooks has spread its capabilities beyond its traditional accounting and payroll services that it offers to small businesses. It's ventured into offering hardware for point of sale technology, similar to Square's dongle that allows small businesses to accept card transactions. They've added that. They've added Quickbooks Cash, which is essentially a business bank account with a high yield interest rate. And just recently, they've announced their acquisition of MailChimp. So not only are they moving to expand their small business customers' ability to move more of their relationships within the QuickBooks environment, but they're also working to offer more functionality when it comes to supporting the marketing and business development efforts of small businesses with the MailChimp acquisition. So this will be one for sure to be able to keep an eye on. Marcus has continued to grow. You can see here they've offered their personal loan offerings for some time now. They have a slick digital interface to facilitate a great user experience. They've moved into Marcus Pay, which is a partnership with JetBlue to offer the buy now, pay later functionality to traveling and vacationing. They've offered Marcus Invest, which is a robo advisory service, and they facilitate quick money movement through their Marcus Money functionality, where it's more of a traditional savings account functionality, but all digital. So what does this mean for the outlook for the future? Well, it's important to, I think, for financial institutions to understand what is their value proposition. Certainly for many, that has been a focus on enhancing customer service and providing that delightful experience. But what we've seen now, because of the rapid changes of technology, is that consumers and businesses demand digital-based solutions that enable near instant movement of money. They want to be able to have the ability to choose to do certain basic financial institution capabilities through the digital channel, and have that full digital functionality when it comes to the ability to choose, not necessarily have that face-to-face interaction in a branch environment, but be able to do pretty much everything they would normally do through a branch, do it digitally. And so that's where I think for many financial institutions, it's about determining what's your value proposition, what's your differentiator. And we've certainly seen how the banking as a service model is certainly becoming looked at more frequently by financial institutions. The open banking concept of bolting on certain types of functionalities that are offered by fintech firms and others. So it's interesting to see just how things are changing in that regard. But from our perspective, we have a firm belief that one thing that enables a differentiation of your institution to others is how you have decided to move into becoming a data science firm and being able to use customer intelligence to broaden and deepen your engagement and relationship with consumers and businesses. And that's what we believe is going to be a key step for the future, is transforming your industry, your institution, to be more data centric and being able to look at things from a data science perspective on how to engage with your consumers and businesses. And as we look at this aspect from a transaction standpoint, we can see how being able to improve your personalization and your ability to be able to identify life events and lifestyle changes of your consumer and business customers is going to be able to help you deepen your engagement with those customers, despite all of the competitive pressures there are from fintech firms and the DeFi firms that are out there looking to entice more of your consumer and businesses relationships away from your institution. And this is going to be a key component to being able to transform your institution to make it more competitive in the future. You can just see how the variety of different insights can be so powerful in terms of your understanding of your consumers and businesses, just from what they're doing from an investment standpoint, where they're looking to for solutions outside of your institution from a lending perspective and a money transfer perspective. The insights are really powerful in terms of being able to provide a broader look into your customers from a consumer and business standpoint, and how you can better serve them from a product development standpoint. And also too, it's interesting to see how data science is rapidly changing in our industry in terms of machine learning and artificial intelligence capabilities. And this is a key component to consider as we move into the future, and having the ability to have clean data to be able to develop these insights and capabilities through this new environment to predict customer behavior is going to be another key component and development for your institution to be more competitive in the future. Well, thanks so much for joining me today. I greatly appreciate the time you've spent, and we'll look forward to engaging with you again, hopefully soon. And as I mentioned, please feel free to reach out to me via my LinkedIn page, or visit us through Insight Financial Marketing's website, which is www.infimark.com. Thanks again for tuning in, and we'll look forward to communicating with you again soon.